You've talked about the fact in the report that asset management is the main earnings driver. Talk to me a little bit about the inflows in asset management. Why did they do so well?
Yes, thank you. We're really very pleased with the organic growth that we are able to generate on our asset management division, and I think it's the proof that our high conviction active asset management positioning really is endorsed very well by clients in an environment of ever lower yielding environment, and in an environment where clients and investors are looking for income and for solutions. Our high conviction products resonate very well with them. So we have generated on an annualized basis 9.6 growth from net new money, and that with stable margins at 44 basis points, which I think is also proof to the very specific positioning of our high conviction approaches. And we're also pleased with the fact that inflows do come from different channels, different markets, and do also come from different product lines, from Strategic Income Fund from 24 over to the emerging market debt franchise managed out of Zurich, over to our ESG-driven emerging market equity program, down to factor-based systematic multi-asset class approaches. So I think at the end, you have to make a difference to the clients, and we seem to do it.
Now, you do also, though, talk about second half risks, Zeno. Can you elaborate a little bit on that in terms of the behavior of clients and investment trends, as how bad those risks are going to be in the second half?
Yeah, perhaps first, the first weeks of the second half year show exactly the same pattern as the first. So we remain to see strength where we have been strong in the first half year. But obviously the second half year, first of all, it always brings some seasonality with it. Second, we think we have a challenging environment in terms of geopolitical tensions and ever lower interest rates. So this will be a challenging time also to navigate and protect client assets in a challenging environment. And therefore, we just wanted to highlight that to our investors. But nothing Vontobel specific to worry about.
How are you passing on negative interest rates to your clients in wealth management, Zeno?
Yes, first of all, we're a wealth and asset manager and not predominantly a bank. So for us, net interest income is only 7% of our revenues. So it is a topic we think about, but it's not a make or break topic for Vontobel. And as we see ourselves as the wealth managers and partners of our wealth management clients, we are very reluctantly passing negative interest rates on, as we are also not the main cash depositor for our clients. We are their advisor and partner, and when it comes to wealth and asset management, so we do that only if cash would reach tremendous relative amounts relative to the overall wealth that clients have with us. But in general, we serve our clients as investment advisor, and therefore it's not a big topic for us to pass it on to clients.
Just finally, Zeno, tell me how you see the inflows into wealth and asset management developing over the rest of the year, because we've talked about the strength you've had in asset management. Does that mean you see more demand for active funds? But in wealth, we've had the weakest inflows actually in years. So how are wealth and asset management going to develop for the rest of the year?
Yeah, we see. It's always difficult to look ahead in terms of investor sentiment and flows over a half a year. Many things can happen, but we see currently a strong visibility on the asset management side. So the demand for active managed solutions remains strong. We also gave an update to our investors on the performance of our products. Performance is very strong. So we are very constructive on flows in asset management. On the wealth management side, we had more of a specific event as we had to digest the integration from last year, and obviously from an integration process there may be some fallout. We had some of that fallout. We believe that the underlying strengths of the platform through time will return to our target of 4 to 6% annual growth, and we also confirmed this target today to our investors.